Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because although it may not feel like it, Bitcoin is still holding support here. And sentiment is somehow this fearful with Bitcoin still trading above $110,000. Now, we do have to be honest with ourselves. This isn't the most bullish chart in the world. Bitcoin is holding on to support for dear life, and we have these ugly wicks to the upside as investors took profits aggressively above 120,000. But I do think people calling for a cycle top here and a bear market immediately are jumping to conclusions a little bit too quickly. Bitcoin is still holding its 20-week moving average and still well above its 50-week moving average, which has been our macro support this entire cycle, as well as in 2021. So, I wouldn't be surprised if we actually saw Bitcoin catch investors off guard by bottoming here at 109,000. And I'm open to it coming down and retesting the 50-week once again. But I don't think that has to happen for Bitcoin to make new highs here. It's clear that this sideways chop is making investors more and more concerned based on what we're seeing here from the crypto fear and greed index. We see something very similar with the spot ETF inflows. They've been relatively flat in terms of inflows and outflows as Bitcoin has been chopping sideways here. And it's actually crazy just how perfect these ETF inflows are at representing investor sentiment. If you look at our biggest outflow day since these ETFs went live, it happened to align perfectly with the extreme greed we saw during the tariff drama. And if you look at the last time we had extreme greed on market sentiment, that was also the record high we saw on ETF inflows, showing us how important sentiment is when it comes to markets and how sentiment-driven even so-called institutional investors are when price is rallying aggressively or dropping aggressively, causing them to FOMO in or panic sell. And this is exactly why this week's free weekly report was called Fighting the Fear. I know sentiment is fearful right now, and these corrections always have a risk of going lower. But instead of trying to predict exactly what's going to happen, I think it's important to focus on support and resistance levels and to always be prepared for multiple outcomes. One of the main reasons why I believe it is quite unlikely that the cycle is already over is because so far this topping pattern has been almost identical to what we saw in 2021. So either these are the laziest market makers ever, or many people are going to believe this is the cycle top just to be wrong and watch Bitcoin make new highs. But whether we end up having the final push scenario where Bitcoin enters price discovery very shortly due to rate cut excitement, or the full reset scenario where Bitcoin spends a lot longer consolidating and shaking out investors will come down to what the Fed decides to do. And whether they decide to prioritize the labor market and ease more aggressively than the market currently expects, or if they decide to prioritize inflation and remain stubborn with rate cuts. I do believe the Fed's monetary policy decisions are going to matter more than seasonality here. So although I know September is usually red and October and November are usually green, I'm open to that happening again. But I do believe that the Fed is the main driver of markets right now, especially with the weakness we're seeing in the labor market and the beginning of this new easing cycle and how aggressive they decide to be. So I expect volatility to continue here in September as we get closer to that FOMC meeting. We do have an important inflation print coming up next week. Is it going to come in hotter than expected and make it difficult for the Fed to ease as aggressively as it needs to in order to fight the labor market weakness? Or is it going to come below expectations? We're going to have to see how the data comes in, and I expect it to have an impact on what Powell says on September 17th. So what do we actually do about this? We know there's many paths the market can take, and it's pretty difficult to predict here because we don't know what the Fed is going to do on what time frame. We know they're not going to let this entire debt-driven global financial system collapse. So all we need to do is survive the volatility and see this long-term trade through. And my favorite way to do that is by being conservative when Bitcoin is very far from its 200-week moving average and being aggressive the closer it is to its 200-week moving average. As of right now, we're in the expensive region. So Bitcoin isn't cheap by any means if you're looking at 1 to 3 year time frame, but it's not super cheap either where I'd be piling money in here to hold long term. Now, this doesn't mean that there aren't opportunities in the market. If you're a trader, these sideways ranges are some of the best times to make money. especially when volatility is higher. We've seen some great setups on Ethereum, Solana, and Chainlink recently, and altcoins in general have been showing resilience. Ethereum is holding above the $3,000 level, which is an important psychological and technical support. Solana has also been consolidating very strongly after its last rally, and if it continues to hold above $150, I wouldn't be surprised if it makes another push higher. Chainlink, on the other hand, has been slowly but surely gaining strength, and the fundamentals around it continue to improve with all the partnerships and integrations we're seeing in the real-world asset space. These assets have been benefiting from Bitcoin's sideways action, and while BTC consolidates, they often get room to breathe and grow. This is why I'm keeping a close eye on them right now. But of course, everything still depends on what Bitcoin decides to do next. If Bitcoin breaks support, these alts could see some downside as well. So risk management is still key. MicroStrategy has also been in the spotlight again with its latest Bitcoin purchases. Every time the market starts showing signs of weakness, it feels like Michael Saylor comes in and reminds everyone why they're bullish on Bitcoin in the first place. Their conviction has been unmatched, and honestly, it's a big reason why so many investors still have confidence in the long-term growth of this market. The company now holds over 200,000 BTC, and this makes them one of the biggest institutional holders on the planet. While some people argue this concentration is risky, I personally think it speaks volumes about the level of conviction we're seeing from companies that understand the long-term value of scarcity and decentralization. It also gives Bitcoin more credibility in the eyes of traditional finance and regulators. And when institutions see someone like MicroStrategy constantly doubling down, it forces them to reconsider their position. That's why I don't think it's a coincidence that ETF inflows tend to spike around the same time these announcements are made. It's a psychological boost for investors and a reminder that Bitcoin's long-term story remains intact. Ethereum also deserves special attention right now. Beyond just holding key technical levels, it's continuing to position itself as the backbone of decentralized finance. We're seeing steady adoption across staking, Layer 2 scaling solutions, and real-world applications. The amount of ETH locked up in staking has been steadily increasing, which reduces supply on exchanges and creates a more stable market structure. Plus, the ecosystem around ETH is expanding faster than ever. Layer 2 networks like Arbitrum and Optimism are attracting billions in total value locked, and this shows how Ethereum's scalability roadmap is actually being implemented successfully. I know a lot of people still compare ETH to Bitcoin in terms of performance, but I think that misses the point. Bitcoin is digital gold, but Ethereum is more like digital infrastructure. That's why I'm not worried if ETH lags a little in performance. Its long-term utility is what makes it so powerful. If Bitcoin sets the narrative, Ethereum builds the economy that runs on top of it. That's why I believe ETH is going to be one of the strongest performers over the next cycle, even if the short term remains choppy. Solana has been another fascinating story this cycle. After all the drama it went through last year, many investors had written it off completely. But what we're seeing now is a full recovery and even stronger fundamentals. The network activity has been skyrocketing, especially in areas like NFTs and DeFi. Solana is proving itself as a high-performance blockchain capable of handling massive throughput at very low cost. And this isn't just hype. Developers are actually building real projects on it again, and users are coming back. When you combine this with the fact that it's holding such a strong technical structure on the charts, it's hard not to be optimistic. Of course, Solana is still more volatile and risky compared to Bitcoin and Ethereum, but that also means the upside potential is higher. As long as it continues to hold key levels like $150, I think Solana has room to surprise investors to the upside. The comeback narrative is powerful, and narratives are one of the strongest forces in crypto markets. If the broader market holds up, Solana could end up being one of the top performers again. Chainlink is another project that deserves recognition right now. While it may not always grab headlines like Bitcoin, Ethereum, or Solana, it continues to quietly build the infrastructure that so much of the crypto ecosystem depends on. Chainlink's role in providing secure and reliable data feeds is essential for DeFi protocols, derivatives, and even real-world asset tokenization. Recently, we've seen more and more partnerships between Chainlink and traditional financial players who are exploring tokenized assets, and this positions Link as a bridge between old finance and new. On the technical side, Link has been forming a strong base after months of accumulation, and historically, this has often led to significant rallies. What I like about Chainlink is that it's less about hype and more about steady execution. The team continues to deliver on its roadmap, and when markets realize how important this infrastructure is, Link tends to catch up quickly in price. So, while the spotlight may be on other coins right now, I wouldn't be surprised if Chainlink ends up being one of the stealth winners of this next leg of the cycle.